And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. Welcome to the market forecast for Tuesday, July 5th, 2022. I am JD. I'll be your host this week while Hogue is out living it up on vacation. I hope you all had a safe holiday weekend and got a chance to take some time away and relax. As always, thank you for choosing to spend your time with us this morning. Hopefully, we can all walk away from this with a little more knowledge and understanding than we had when we started. Remember to hit that like button and feel free to share your comments and feedback in the chat. We appreciate all of your feedback. And if you haven't already, go ahead and subscribe to our channel so you get those wonderful updates every time we go live. Just a quick reminder about the schedule for this week. Since Hogue is out, we will not be hosting any Make Hogue Money sessions or group coaching sessions. But those will return next week when John is back. And also, don't forget, our trading strategy course starts next Monday. Use this link to sign up if you haven't done so already. I'm dropping it in the chat right now. There you go. Well, let's get into it. For today's economic calendar, it's looking pretty light today. We have factory orders out at 9 o'clock Central Time, followed by a few T-bill auctions and announcements. That's it for today. The rest of the week will be highlighted by the release of the FOMC minutes tomorrow at 1 o'clock Central Time and the June jobs report, which comes out Friday at 7:30 Central Time. Overnight, stocks in Asia closed mostly higher, mildly higher. Shanghai Composite was down marginally at 0.04%. The Nikkei was up just over 1%, and the Hang Seng Index was up about 0.1%. Markets in Europe at the last check, trading mostly lower this morning. DAX was down 0.93%. The CAC was down 1.04%, and the FTSE was down 1.02%. And in the U.S., stocks are taking a little hit this morning before the 8:30 Central Time open. The VIX is down about 1.8, close to 2% this morning at about 28.17. And the yield on the 10-year Treasury note is currently holding at 2.91%. Let's see who's in the room and give everyone a quick good morning. Shaw, good morning. Chilling with Dylan. Patrick, Tachyon, Scott Saw, Charles March. Just completed phase 2 of the Combine. Great job, Charles. Remember, funding is just the beginning. The hard work starts now. Tachyon adjusting his account. Baffles me why 1 micro equals 1 money. So that is a tech issue that we've gotten a lot of feedback on, and we are currently working on it. It does take some time to adjust those types of things, but our tech team is working hard on it. Alfred, good morning. Bill Phillips, Glitter, Alfredo, Zerain, Trading Research, Will Doherty, Taurus Trader, 3 Lions, Money Kiddo, Mike, Charles March, Rusty Golfer. Good morning to everybody. All right, let's check in on some charts. Oh, right before we do that, though, before we get into the charts, I just want to fill you in on a few things, just for full disclosure. So I left for vacation 2 weeks ago, and I returned in the middle of last week. So I have not put on a trade in just over 2 weeks now, and I plan on starting slow and easing back into it. After barely looking at the markets for a while, it really doesn't make sense for me to just jump right back in. It's never worked for me in the past. So something I did to give myself a bit of a fresh start, a fresh perspective. I wiped all my charts clear last Friday. I pulled out all the old levels that I was looking at that never played out. All of the chart patterns that I was looking at that never played out either, all of those are gone. Now all I really have on my charts are a few short-term moving averages, the VWAP, volume bars, slow stochastic oscillator just on the daily charts, some volume profile on the 30-minute charts, and of course, weekly kickoff levels. That's it. So what I thought we would do for today is just kind of run through a few of the charts for the markets that I actively trade and sort of give you a high-level overview of what I'm going to be looking for this week. Like I said, I'm starting back slow, so I'm not really expecting to make too many trades today, but rather be more of an active observer. And if I do trade, of course, I will definitely share that with you on the market recap later this afternoon. Does that sound good to everyone? All right, so let's queue up some charts and we'll get into it. So let's start with the daily on the E-mini S&P 500 future. So looking at this daily chart of the September contract, ES looks to be a little bit flat and sort of searching for direction the last few months. That said, it's been a great market for technical traders looking to play both sides of the market, but really not so many swing opportunities. The swing trading opportunities have been fewer and far between in recent months, which is something that I'm actively pursuing more than day trading. I've been trying to put on more swing trades than day trades the last couple months, and that's kind of the direction I'm starting to head. But you could see these short-term moving averages are relatively flat and almost slightly converging, which to me is a sign of, I guess, not so much indifference, but for more sideways price action going into this week. Our extreme levels are just above this 50-day moving average to the upside and this mid-June low right around weekly kickoff low. These are the levels I feel traders will begin to sort of shift in their sentiment a little bit. Let's flip over to the 4-hour. So again here, I see a market sort of struggling to find direction. We've seen quite a bit of congestion down at this 3780 to 3760 level going back to early June. I would expect to see some more consolidation if we get down there again early this week. We did see this minor double top in late June that met its measure move objective, and there's sort of a minor double bottom here too from late last week that is currently struggling to meet its price objective. Like I said, I wasn't trading, so I missed both these trades while I was out on vacation. But I'm watching to see how this minor double bottom play works out. Other than that, prices keep bouncing around these shorter term moving averages, which remain relatively flat for the moment. On to the 30-minute. So now I'm nowhere near as fluent with the profiles as Hogue is, and I don't pretend to be. But looking at this, I see 4 consecutive days closing inside or just outside the previous day's value area, signaling consolidation to me. This move higher during yesterday's abbreviated session has corrected itself, and the ES is poised to open inside Friday's value area, maybe possibly even below this value area low. These short-term moving averages are signaling a little bit of weakness right now. But like I said, this 3780, 3760 area has seen a lot of action recently, and I would expect to see that level protected again. And with some overnight inventory trapped long above that 3840 area, I think we could see a test of that 3780, 60 area a lot sooner than expected. We're testing it right now, actually. So overall, I'm looking for some sideways action this week. Let's look to our continuation chart. These 10 and 20-day moving averages, like I said, relatively flat. So is this slow stochastic oscillator down here, signaling sort of sideways momentum right now. We did see some stellars step in overnight right at this 10-day moving average, but I think there's plenty of opportunity to play both sides in this market this week. So let's see what happens after that. Let's take a quick look at crude oil. So the call for crude this week in the weekly kickoff is sideways, with points of invalidation at last week's high right here at 114, and this low from June 22nd at 101.5. Since putting in this high back in mid-June, we've seen some increasing volume on the way down, and right now prices look to be forming a fairly prominent little bear flag here. But you can see these moving averages converging on each other, which is telling me that more sideways action is likely to happen this week also. Over to our 4-hour. Still looking range-bound for the moment to me. Volume looks fairly steady, but the down moves are showing a slight increase in volume compared to the up moves, which is a traditional sign of weakness. But we're also in a shortened holiday week, and there is likely to be lower market participation. Over 2-hour, 30-minute. So after gapping higher over the weekend yesterday, oil looks like it was poised to open inside of its value area. It looks like it is right now. We still have a few minutes before that open. We'll see what happens. But if you look at last Thursday's value area high and Friday's value area low, they're almost identical, nearly to the tick. So if we were going to make a move down there, I would expect to see that area defended if it makes that move. There's also quite a business done between Friday's point of control here and the value area low, so I would imagine that a test of Friday's low would be met with some buyers stepping in. Overall, taking a look at this continuation chart, this 50-day moving average has crossed back above the 10 and 20-day moving averages for now, which is why this slow stochastic oscillator is showing momentum pointing slightly higher. In the short term, I'll be watching to see what happens around that 107.10 area for potential buying opportunities, and also monitoring this bear flag for a potential swing trade on the breakout. On to the NASDAQ. So here's the daily of the September contract. Similar to the ES, NASDAQ futures also seem to be searching for some direction at the moment. Moving averages are sloping slightly downward, but let's face it, this market is relatively flat right now. The call for this week is to see more sideways price action with our points of sentiment shift just above the 50-day moving average and right around this low from June 16th, very similar to the ES. On to the 4-hour chart. So we do have sort of this minor bear flag. It looks like prices broke out but failed coming back here to June 16th. Here's where this bear flag started. Let me kind of squeeze this down a little bit. Prices broke out but failed to move any lower, subsequently forming this sort of lower high right here. These short-term moving averages are converging, but I'm still not seeing a definitive shift in direction for right now. I think this market is still range-bound and will likely continue to be for a little bit. Let's take a look at the 30-minute. Again, this one's similar to the ES also. 3 consecutive days closing inside or very close to the previous day's value area. The market initially gapped higher up here, just like the ES, made its way back lower, and is likely to open regular trading hours inside of Friday's value area. There could be some unfinished business right here around Thursday's low, but we did see plenty of buyers stepping in at this 11,400 area last week. Overall, looking at this continuation chart, I'm expecting to be a little quiet this week, but you know what they say, holiday weeks are a little different, and we're down 1.5% going into the open. So I guess this could be up for grabs. Again, we saw some early rejection at this 10-day moving average earlier this morning, but this higher low after failing to follow through on the breakout of this recent bear flag is definitely a sign of indifference. And we'll likely see traders jockeying for position for most of the week likely. That's what I'm going to be looking for. It should leave some opportunities for short-term traders to play both sides of this market as well. And lastly, let's take a quick look at the gold market. So here is our daily chart of the August contract. So after this sort of little rip here Friday, we were expecting to see some follow through to the upside, similar to what we saw back here in mid-May. Right now, we're not really seeing that follow through, albeit that it's still early in the session, early in the week. This market has been in a sort of a 2-month stretch of consolidation, hence the narrower than usual weekly kickoff range. Going back to late last year, maybe we can look at that on the continuation chart. This 1850 level, weekly kickoff high, has seen a lot of action, and it's lining up nicely with this 50-day moving average, making it just as much a visual level as it is a technical level, I think. So moving on to the 4-hour, we can clearly see that this market has been range-bound since going back to early May. And there's this significant drop in volume during this little slide lower over the last 2 weeks. I'm not really looking to see this happen, at least not this week, but a significant close below this 92 level could start signaling a shift in sentiment from sideways to lower. Another test of this area isn't out of the question, but I'm really not looking to see this market fall out of bed right now. Even though it was trading a little lower this morning, I'm just not looking for... The big puke is not on my radar, I'll say that. Onto the 30-minute. Now, there is a little unfinished business from this gap lower early Friday morning. So, like I said, another test of this area isn't out of the question. But look at the way these ranges seem to have been widening out over the last week, with these big volume spikes coming mostly on the upswings. It's telling me that there is some strength in this market yet, and we might just get the follow-through we're looking for. Maybe after some weak shorts get trapped a little bit. Overall, though, looking at this continuation chart, these other short-term moving averages are sloping slightly lower, while this slow stochastic oscillator is showing us that momentum is pointing slightly higher. This isn't some kind of anomaly. It just means that there's a little indecision in a slow market right now. Gold has held steady during the first half of the year. It only dropped about 1% from January through June. And the consensus seems to be for that to continue holding steady in the second half of the year. So that is what I am looking for this week. Let me shift back here. So I'm going to check the chat real quick for any comments or questions. Micro counting the same towards the max contract. Yeah. So like I said, that is something we are working on. We've heard your feedback and we're looking into fixing it now. The moving averages I have, Nicholas Sodaro asks, just curious, what are the moving averages that you have on these 30-minute charts? Oh, that was the 4-hour. So on these 30 minutes, the green bar is a 10 period, blue bar is 20 period, and the black bar is the VWAP on the 30-minute chart. JP Morgan said oil could go to 380. I read that article yesterday too. Wouldn't that be something? CL Open is going crazy. I guess we could... I do have a 1-minute chart for crude oil open. I guess we could take a peek at that. I don't have the opening trade set up the way Hogue does, but yeah, that is a drop. Blew right through that 107 level I was just talking about. We'll see what comes in. Yeah, that's a significant move on the open for sure. 23.50 a gallon for gas. Let's hope not. Juan, what kind of issues are you having with Trade of 8 indicators this morning? Is it just this morning, or has this been happening to you for a while? Anne-Marie likes 100, 102 as the next test below. Thank you, Anne-Marie. We appreciate that. And that would line up right with our weekly kickoff low. Significant close below that, I think, is when a real sentiment shift could start. Other than that, well, with the shortened holiday week, many traders still likely to be on vacation. It's going to be probably thin volume-wise. I was expecting things to be a little quiet this week, but it's starting off pretty active. Be careful of that headline risk also while traders are out. They like to throw us a few curveballs. So don't get complacent, put your stops in, and stick to your plan. Other than that, have a great trading day, everybody. I'll leave to you now, and I will see you all this afternoon on the market recap. I see you on, Palomino. Just this morning, turning off and on. Okay. I will reach out to our support team and see if there's anything I could figure out. Maybe we could send out a note or something. Thank you, Anne-Marie. I appreciate that very much. Yes, Takian, thank you for reminding me. Everybody take your deep breath and have a great day. I'll catch you all this afternoon on